Hello, everyone, and thank you for joining us for another episode of Advocacy. We are so excited to have Kelly Nelson on here to tell us about Maryland Able accounts. So, what we want to do is have you, of course, hi, Bunny. We thank you for Bunny joining us, but we want everybody to strap in and hear what Kelly has to say.
All right. Well, hello, everybody. I just want to thank Paula and Bunny so much for inviting me to be here and share with you information about ABLE accounts. So, my goal for tonight is just to provide you with just some basic information about ABLE and then really kind of have a great dialogue about how ABLE accounts can help you and your child or family member with disabilities. So, a little bit about myself. I'm Kelly Nelson. I'm the Outreach and Communications Manager for the Maryland ABLE program and have been now for almost 7 years. And absolutely love being able to talk with families across the state and people with disabilities as well to share how ABLE accounts can help them be more independent and have financial stability. I also like to share with everyone in full transparency that I also have real life practical experience managing an ABLE account, as I have a 21-year-old daughter with multiple disabilities who opened her ABLE account almost 7 years ago as well. And I help her to manage it because she needs help with that. So I've had the opportunity to really see how an ABLE account has helped her to develop financial literacy skills, as well as given her dad and I a way to plan and prepare for her future. I know we're probably like a lot of other parents out there. In the back of our mind, we're always thinking about the future. And we got things covered now, right? We're taking care of our kids. But what happens 10, 20, 30, 40 years from now when we're not here? We need to do what we need to do now to start planning for the future for our loved ones, right? So Enable account has really helped with that. So just a real brief overview of Able accounts. And Able accounts are basically a financial tool to help people with disabilities and their family members save money without losing critical means tested benefits such as SSI, Medicaid, and different types of Medicaid waivers. That could include things like community supports, housing waivers, energy assistance, food assistance, and of course, Medicaid, the health insurance. So, the reason that ABLE accounts came to be was actually through some federal legislation called the ABLE Act that was passed in 2014 by President Obama. And what happened was a lot of people for decades were saying, hey, we've got to do something here. We're not able to put money aside for our children with special needs and plan for their future without jeopardizing their benefits. For those of you who have someone who's currently receiving SSI benefits, cash benefits, then you know that they're not permitted to ever have more than $2,000 in assets collectively between their checking account, savings account, anything. If it goes over $2,000, then they are called over resourced, meaning they have too much money and you are given a period of time to spend that money down. But if it doesn't happen within that time period, that person is disenrolled from Social Security. And when that happens, they also immediately lose Medicaid and all those other vital benefits. So when the ABLE Act passed, it gave states across the country the opportunity to open ABLE programs and to make it possible for folks to have an ABLE account and be able to save up to $100,000 without impacting their SSI and protecting their Medicaid and those other critical benefits. So currently, there's 47 ABLE programs nationwide. Maryland is just one of them. We all follow the same basic regulations, or we all regulations. We follow the same regs that are actually housed within the Internal Revenue Code, Section 529A. So that's where our regs are held. And we all have to follow certain rules about how we administer the program, including how much money a person can contribute per calendar year. That's called our standard annual contribution limit. This year it's 19,000. It's gone up for about $1,000 for the last several years, and we're thinking that might happen again in January. But that means that a person can put up to $19,000 in their ABLE account per calendar year, and they have tax-free earnings. You don't pay any federal or state taxes on the earnings in the money for the money in the ABLE account, and not when you take it out either. You're able to take it out whenever you need it to pay for anything that's going to support your family member in health, independence, or overall quality of life. And furthermore, there's tax benefits for families that are making contributions to an ABLE account for their family member. Whatever we put into the ABLE account, if we live in Maryland, we're able to take an income subtraction off of our Maryland state taxes. So if you're single and filing yourself, it's $2,500 worth of your contributions can be counted as an income subtraction. If you're married and filing joint, it's $5,000. So every little bit helps. And that was one of the things that right away I saw the value, because let's face it, as parents, we are taking care of everything. We're providing for our children. We're paying for things, whether we have an ABLE account or not. So it made sense when I found out about ABLE accounts. Okay, gosh, I'm paying for these summer camps and I'm paying for braces. I may as well put the money into ABLE and then turn around and use it when I make the payments, and then be able to enjoy that income subtraction. So that is just one of the main benefits of having an ABLE account is really all about planning for the future, saving and investing money, and still maintaining those critical benefits. Because when we're no longer here and we're not taking care of the rent and all the expenses, we want to make sure that our family members are set up to be able to keep those benefits, especially Medicaid and waivers that are going to support them throughout their lifetime, as well as have money for them to have a good quality of life.
That is all amazing. I remember when we were at the event in Frederickston, I came to the table. I was so excited to learn more about the ABLE account. I first heard about it through Paula, and I wanted to really make sure that my grandson would be okay as he got older. But I do want to ask, what are the eligibility and some of the documents that's required to open up an ABLE account? Is there anything special that a person needs?
Yeah. Okay. That's a great question. Because part of the eligibility for an ABLE account is that you have to meet two things. The first is that a person had to have had the onset of their disability prior to their 26th birthday. And the second part is that you had to have a disability that would meet the Social Security Administration's definition of a disability. And that's usually going to be something that's going to be present with that person throughout their lifetime and have a significant enough impact on their lives that they wouldn't necessarily consistently be able to live independently, work independently, and learn independently. So it's going to be things that are going to be present throughout their lifetime. The types of disabilities are so varied. It could be someone with epilepsy, deaf, blind, someone on the autism spectrum disorder. It could be intellectual disabilities. It could be spina bifida. I mean, there's all kinds of disabilities that qualify. It's just that they had to have the onset prior to their 26th birthday. But I do like to announce that effective January the 1st, the ABLE Age Adjustment Act is going to go into effect, and it is going to raise that age eligibility to age 46. So anyone that had a disability with an onset up to their 46th birthday would now be eligible. And this is going to open it up to millions of people across the country, folks that had traumatic brain injuries, MS, Lou Gehrig's disease, a lot of veterans. So it's really going to be able to help a lot of other people that don't currently qualify.
That is amazing. Now, why did they cap the age at 26? What was so special about the number 26?
Yeah. So what had happened was at the time when the bill passed, they they always have to look at what the cost is going to be to the federal budget, right? So they're saying, hey, this is a tax-free savings and investment account. We just can't let everybody do this. It's going to have too much of an impact on taxes for us. So they had to come up with a number. And if you'll recall, in 2014, we had President Obama was doing the healthcare package. And that's when it became possible for us to keep our children on our health insurance until age 26, right? So they said, hey, that sounds like a reasonable number. Let's do that. And that's what they did. And immediately, ABLE programs nationwide started to advocate for this because we knew veterans and a lot of other people were being left out. It took 5 years to get the federal law changed, the Able Age Adjustment Act, and it's going to go in effect in January. So we're excited about that.
Thank you, Kelly. I appreciate that. Well, I will say this. Kelly convinced me to open an ABLE account for Morgan because I was dead set against it. I think when we went to the conference, me and Kelly talked about it, and I twisted it and I turned it every way possible because I felt like I heard so many different stories about an ABLE account, and I heard more of the negative side of it. And I will say, for me, I was told that, of course, you can put the money into the ABLE account, and it keeps you from, it definitely keeps you from like having so much money into the bank account and preventing them from losing a lot of their benefits. But the pitfall was, and I did ask Kelly this, was if you put so much into this account, and at any given time, if your special needs individual passes away, then I was always told that that money went back to the federal government. So whatever was in the account went back to the federal government. Can you talk about that, Kelly?
Yes. So Paula, you're just jumping right off the big high dive here.
I'm sorry, Kelly.
No,
Well, listen, let's go back and walk on up to the data board then.
But I did open an
miss
account.
anything.
I did open an account after I talked to Kelly. I have opened an account. So go ahead, Kelly.
It's a great question, and I'm glad you asked because so many families have the same question, right? And it's a complex answer, but I'm going to do my best to explain it to you. So with the what they call Medicaid recapture or clawback, it's such a weird name, but they call it clawback. This is true for anybody if they have money in a regular bank account as well. So if someone receives long-term care, say 55 and older, and they're receiving long-term care, housing and medical care and nursing care, whatever, all that stuff, if they were to pass away and in their bank account they had whatever amount of money, the federal government says, hey, listen, we've paid over $1 million, $2 million over your last 30 years or whatever, caring for you. We're going to seek recapture of the $10,000 you have in the bank. We're going to put that back in the Medicaid pot, and we're going to do the same thing for other people. So that's true if you have your money in a regular checking or savings as well. The only way that was ever possible to not have that happen was to create a special needs trust. Notice I said a special needs trust. It's really important that it has to be a special needs trust because that is one of the types of trusts that is going to protect those assets as well. And Maryland ABLE and estate planning and elder law attorneys, we're friends. We work collaboratively together because we know that there's a need for both tools, a special needs trust and an ABLE account. So we work to inform families of how they're different and how they're the same. But let me go back. Let me finish Paula's question first about the money in an ABLE account. So in an ABLE account, if someone were to pass away, God forbid, one of our children, right? If they're not over the age of 55 and they haven't been in long-term care, even if they've been receiving SSI and some Medicaid services, we don't usually see the federal government trying to recapture. It's really for 55 and above for long-term care. But let's just say, many, many years from now, your child's over 55 and passes away. The state of Maryland has said that they will not seek recapture from a Maryland ABLE account. However, the federal government reserves the right to do so because you have to know that when your child receives Medicaid waiver services, funding is coming from two places: federal funds and state funds. And they both make up that payment for all of those services, like community day services, supported employment, community pathways, all those things, right? That is where the funding comes from. So the state of Maryland says they're not seeking recapture. However, the federal government could or reserves the right to do so. So, and that would be true also if you had a first party special needs trust. Maybe there was a medical malpractice suit, or maybe your child was injured in an accident at some point and received a settlement. That money would go into a first party special needs trust. That special needs trust would be subject to federal and state recapture as well. However, if you create a third party special needs trust, meaning it's your own money, mom and dad's money, grandma's money, who's ever putting money into that trust, it's not subject to recapture because that was somebody else's money. Okay. So I hope that helps a lot. I know it's a very complex issue, but bottom line is Maryland Medicaid says we're not going to seek recapture.
Okay, let's go back a little bit because my head is spinning from that. I don't know about you, Bunny, but my head is spinning. I know you said something about the special needs trust, but you said the only special needs trust that they would not go back and recapture the money is the third level,
third party. Yes.
Third party. So, okay, let's go back. If we have a Maryland Able account and someone has a lawsuit, say a medical lawsuit, and they get $1 million. Now, will the federal government, and I don't know if you can speak from that side or the Maryland side, say that they have taken care of your child, but say it only came to like 50,000. How will they do like an audit and only take like 50,000 and not the whole $1 million?
Correct.
Okay.
Correct. They only seek recapture of the amount of money that they put out. So let's also kind of fast forward and think about this. Okay. Way down the road, like, your adult child has been receiving Medicaid, nursing and everything, housing, care 24/7. And I don't know if any of you have ever done your person-centered plan yet and looked at the cost of just regular community day support and supported employment, but you'd be surprised how much money Medicaid pays to our providers throughout the state to do these things. So it's not uncommon for someone living in long-term care for decades to have millions of dollars in money paid out for their care. That's not uncommon. But let's think about that flip side of that. Would my husband and I have enough money to pay for millions of dollars worth of care ourselves? We're not in that situation to do that.
When you put it like that,
I know.
Yeah.
Like,
you had to pay it up front.
It's the trade-off, right? So, but for example, let's just say somebody, God forbid, passed away and, they only had $10,000 worth of services paid out for whatever they were getting, right? Medicaid would come in, the federal government would come in and look at that and say, hey, here's your bill. Basically, this is what we provided. It was, $10,000. Your family member has $500,000. We're going to recapture that $10,000 that we paid for your family member, put it back in the Medicaid pot and pay that out to somebody else. That's kind of how that works. Yeah. So a third party trust is protected from that, however, because that was never your family member's money in the first place. It wasn't, you gave that to that person. So it's complexities with special needs trust. I highly recommend when you all think about that, please, being a state employee, I cannot recommend one attorney over another, but all I can tell you is what you need to do is you need to be contacting somebody who has an area of expertise in special needs benefits, caring for a family member with disabilities, because not all trusts are the same. And you want to make sure you get somebody who really understands protecting public benefits and an elder law attorney or an estate planning attorney with special needs really understands that, and they can help you do that. The reason I even bring up a special needs trust is because remember when I was talking about contributions to an ABLE account? Every year you can put a maximum of $19,000. So let's think about that. God forbid mom passes away or mom and dad pass away. Chances are our life insurance policy plus our estate is going to exceed $19,000. What are we going to do? How are we going to put, a $50,000 life insurance policy into an ABLE account? It can't be done. You can only put 19 for a calendar year. This is where we see a need for two planning tools, right? So some people say, well, if I'm going to get a special needs trust anyway, why do I even need an ABLE account? Which is a really good question, because a couple reasons. First of all, the amount of time that it takes to plan for a special needs trust, it's an investment. Not only financially, but it's an investment of your time. You're going to do a lot of work with an attorney over a series of months, getting that estate plan taken care of. And you are also going to invest in that attorney's time. Okay, so there's a cost to it. With an ABLE account, you can set it up online in about 15 minutes, and the annual cost to maintain that account is $35. There's also some other differences. With a special needs trust, you can put in $1 or $10 billion. There's no cap on how much you can fund that trust with. With an ABLE account, there's $19,000 per year. Now, the other difference is you can look at a special needs trust and know that the person administering that trust or the trustee is going to be the only person that has access to those funds. So if your child has a disability, grows up, and they have the ability to make some of their own financial decisions and do some things and manage some of their own budget, they'll never be able to access that money in the trust. However, with an ABLE account, for those who have the capacity to do that, they can access their money. So it's about creating that independence for someone with a disability that has the ability to do so, can manage and access their own funds if they can. The other is there's different ways that you're going to be using the money. If you need to be paying rent for your family member, you can't do that out of a special needs trust. You can purchase a home in the name of the trust, but you can't pay rent. But with an ABLE account, you can. All right. So it has a lot more uses of what you can spend the money for. So that's a little, I didn't mean to go down that path, but that's some differences between a trust, special needs trust, and an ABLE account. In ways they're similar because they both protect those benefits. And there's some differences as well.
This is really good information. Now, I do want to know, talking about the funds in the ABLE account, how can those funds be used without affecting the Social Security, disability benefits, and Medicaid, Medicare? How can you use those funds without affecting those other funds?
So the money in an ABLE account, even though some of the money may be money that they receive from Social Security, but once it's in the ABLE account, it's not a countable resource. Social Security may not count that money against them regarding their eligibility, up to $100,000. So let's just say in a perfect world, we were all able to contribute $19,000 a year every year to our family members' ABLE account. And I don't know how, because it's late, I can't do the math, but whatever. Would it be 5 years, 19, I don't know, 6 years before we reached 100,000? Let's just say that happened and it went beyond 100,000. Technically, you can have whatever amount of money you want in your ABLE account, but at $100,000 balance, Social Security would be notified, and they would push a pause benefit on your monthly cash benefit. Medicaid would remain in place. All waivers remain in place. But the cash benefit would be in a state of suspension until such a time you were to spend some money down. And when that happens, Social Security could automatically reactivate that monthly cash benefit because they were never disenrolled. And that is the big difference between trying to save money in a regular account, checking, savings, 401k, whatever you're thinking of doing. That's a countable resource. It can't exceed $2,000. So the money inside of that ABLE account belongs to that person. That person's the owner of the ABLE account and the beneficiary. And the money that is spent out of that account The regulations for spending that money, what we call, or the IRS calls, a qualified disability expense, is anything, any service, any product, any item, anything at all that's going to support your child, your family member in their health, their independence, or their quality of life.
I was just about to ask that question. How can those funds be used? And do you have to document that?
Oh, good question, Bunny. I love that, because best practice is to just maintain documentation. Now, this looks different for different people. Who's ever managing that account, if it's a parent and you're serving in the role of ALR, authorized legal representative, such as I am, I'm a seasoned lady. Let's just put it this way. I'm not a scanner. I'm not I don't have apps for everything. I have like a good old fashioned file folder, like, yes, paper, that's me. And anytime I make a withdrawal or spend money from my daughter's ABLE account, I just throw that receipt in an envelope marked ABLE account 2025. So if I ever needed to produce documentation of how I was spending the money, I would be able to say, here's 2025, here's 2024, all the way back. Because the only person that's going to ask to see those receipts, it's not going to be Social Security or Medicaid, but it would be the IRS. Remember, I said our regulations were in the IRS. How would they know? Well, that would be just if your family member was just so lucky and got pulled for a random audit. There's no more likely that they're going to get audited because they have an ABLE account, but if they're paying taxes and they're in the system, they could just get pulled for an audit. The IRS is going to want to know two things. They're going to say, hey, this is tax-free savings. Do you even qualify for this? Paula, do you qualify for this? Because I need to see, do you have a disability that started before 26 or 46? And what kind of disability is it? Is something that's going to be present with you through your life? The third thing they're going to want to know is, how are you spending this money? Is this money being spent for the beneficiary? Is it being spent on Morgan? That's what they want to try to protect people from, having the money in the ABLE account spent on other things. So that's why I just keep paper receipts. However, other people are like, oh my gosh, like, what are you, from the Stone Age? No, I just, I get the ABLE prepaid card and I just keep track of everything in that list. It has the name of the store that I purchased it from, and I just do that. Or some people are just like, oh, I just scan my receipts at the end of every month. And I'm like, what? To me, that's like too much work, but other people like it that way. Yeah.
And I do see the benefit of them definitely watching these accounts, because if you're taking this money out and it's tax-free and you're taking it out to use it for something that is not pertaining to the special needs individual, then we're kind of misusing that money. So I do get that. And I do know that you may have, I think you already talked about this, but we have Keisha asking this question. And I know you went over this, Kelly, but can you go over that one more time? Because we did talk about that, about when someone passes away. And let me see if I can answer it. Let me see if I understand it.
Come on, Paula.
Okay, what happens to the account when the when the account holder passes away? If the account holder receives benefits, will the remaining money go to the state? The only way that money would go to the state is if all of the different waivers, Medicaid, any of the things that were paid out for your special needs individuals. For instance, if it came to $100,000, so they're going, and I don't remember the wording you used, but I guess basically it's a refund to the federal government. So what they would do, Keisha, is they would take that money, whatever was paid for your special needs individual. If it's $1 million in that account and only $100,000 was used for their care, then what they're going to do is go in that ABLE account and they're going to take out the $100,000 and put it back into the Medicaid bucket. Because basically what Kelly was saying was, if they basically gave you an advance, they paid you in advance for the care. So naturally, what they want to do is make sure there's money there for the next person that comes in and needs that. So if there's $1 million left in there, but they only used 100,000 for that kid, that special needs person's care, then what they're going to do is go into that account and they're going to remove the 100,000 out. Now, one thing we didn't talk about was what's going to happen to the account if they pass away. For my understanding,
That's my
if
question.
that account is set up for a special needs individual, then ultimately for me, what I'm thinking is that account is no longer applicable to that person because that person is no longer there. But I'll let you handle that, Kelly.
Yes. So that's kind of like part two. We tackled the really sticky one about Medicaid recapture, and also just adding to what Paula was saying, that the federal government can come back and what they call recapture those funds to put back in the bucket, right? But the state of Maryland has issued a letter stating that they will not seek recapture from an ABLE account. But let's just pretend that no Medicaid recapture happened at all. Your family member passes away and there's $20,000 left in the ABLE account. What happens to that? Because people say, "Oh, does it go back to Maryland ABLE? Like, what happens to that money?" So again, these are financial accounts that belong to the person with the disability. They are the owner of the account and the beneficiary. When they pass away, whatever money is left in that account that's not subject to recapture is going to become part of his or her estate. Just like when we pass away, we have an estate, whether we have a will or whether we don't have a will, it will become part of our estate. And what would happen is then the money can be used to pay for a funeral, final burial expenses, any outstanding balances that the ALR needs to pay things out on. And the balance left, right? It will remain open for a couple of months to be able to pay out those things. But then the account would be closed. It would be liquidated. And Paula, I like the way you were thinking, because that shows me you were really thinking about this. So the person with the disability that owned the account is going to now have this money in their estate, and it is going to go through probate if they don't have a will, right? And it's going to go in this order. They're going to look, did this person have a surviving spouse? No. Surviving children? No. Surviving parents? Maybe. Surviving siblings? And the court will decide in that order who gets that amount of money, that gets the estate. And then when they receive that, let's say it was $20,000 left, whoever is the recipient of that estate is now going to have to pay taxes on the earnings portion only, because the whole time it was in the ABLE account, it's all tax-free, federal tax-free, state tax-free earnings. And so now that it's passing to someone who's not ABLE eligible, they'd pay taxes on the earnings portion, but they could have that balance. Yes.
So Keisha, I hope you understand, like with your question, again, and that's the part that I was missing. Yes, Maryland will not come back after that money, but the federal government will, because as Kelly explained, for our special needs individuals, some of it comes from the federal, some of it comes from the state. So whatever the federal government has given us, that's the money that's going to have to be given back. So if your question is, so if a person was on a waiver for 20 years with $100,000 budget and the account has 500,000 in it, the funds will go back to the government. If out of that 100,000, the federal government gave you 50 of it will be taken back. Correct, Kelly? Do I have it
Yes,
right?
they're not going to just see an ABLE account with money in it and take all the money. They're only going to take what they paid out. So let me like try to apply this in a different capacity. So all of us on the call tonight, right? We're all young and healthy and all that good stuff, right? But let's just say 40 years from now, we are advanced age and we don't have family that's going to take care of us. We need to go into a nursing home. This is the rule for funding like this. Medicaid would do a 5-year look back on each one of you. They would want to see, did you stash away your money, giving it away to your siblings, your children, and just giving it to them so that they could have it? Because they won't pay for our care. They won't do it. If we have $500,000 in the bank, they would say, Bunny, I see you have $500,000. I'm going to have you pay for your nursing home until you exhaust that 500. And when you do, we're going to step in. Okay, that's what they would do. So it's sort of like the reverse of that, right? They would make us divest ourselves of all of our assets, whether we had $5,000 or $20,000 or 500. They'd say, Paula, we will pick up your nursing home care when you use your rest of your money up. I see you got $5,000 in the bank and you're going to pay for your first month at the nursing home, and then we're going to come in and help out. Does that make sense? They won't step in and give us money to pay for our care if we have our own resources. And it's the opposite. They take it back to replenish the pot if your family member dies with large assets that exceed the amount of money that they paid for your services.
I learned that when my dad went in the nursing home. I learned that. Yep.
Yes. Yeah. So that's something we really think about. But I too have, my father-in-law was in a nursing home and they did that 5-year look back. They want to make sure he's not stashing money by giving it to his kids. And, but they did. They took care of him. He had all the care he needed for the duration of his life, but he did have to divest himself of the money that he did have, which wasn't a lot of money, but still, whatever there was there, they wanted him to spend it first.
And Keisha, I think your question meant, and I guess I was using your scenario, if they had $100,000 and the account had 500,000. What I was looking at is the overall care. So I didn't look at it as 50,000 times the 20 years or current year. I was looking at the overall cost. So if they do an audit, if your special needs person passes away and they do an audit, and they say, hey, the federal government has spent $50,000 on your care, they're going to go into that ABLE account that has 500,000 in it, and they're going to take their 50,000 back. Is that correct, Kelly?
Yes, they're not going to bill you for more than what they provided in services. So it's just limited to that amount. They don't just garnish everything. They only take what they paid out. And there is an accounting that would happen. So they're keeping track. I mean, like, this was an eye-opening thing for me. I don't know, Keisha, if you were here in the beginning of the call, but I have a 21-year-old daughter with multiple disabilities, and she's finally got her person-centered plan is in for services that she'll be receiving now that she's out of the school system. And the first time I saw that plan, when they attached money to it, like, I knew that so many days a week she would go to the ARC and they would do employment services, and then there's a budget next to it. And I'm like, what? That's how much that cost. And then she has her community day supports, or CDS, I think they call it. And I saw how many hours a week she'd have. And then I saw how much that would cost a month. And I was like, oh my gosh, that's an eye-opening thing for me. So I couldn't afford to pay someone to take her out to do employment training. I couldn't afford to have her out doing the community day stuff and private pay that myself, because same thing like with a nursing home, right? If our parents get old, oh my Lord, it's like $5,000, $4,000 a month to keep them in a nursing home. Like, we would run out of our money really fast. So that's kind of their way of recapturing. And that's why they call it Medicaid recapture. They recapture those funds.
And she's asking again, is it for the total years is what I'm asking. And I believe that's what you're saying. For whatever, if they're here for 20 years and they've taken care of them for 20 years, and the federal government does an audit and their cost comes out like we provided for 20 years, $100,000, then we want our $100,000 back. If we can
I see what you're saying. Okay, great. Thank you. That is helpful. So I don't work for Medicaid, so I'm not going to be able to answer it in an official capacity, but it's my understanding that's for services provided for age 55 and over. Okay. As it pertains to ABLE, the money, let's just say somebody opened their ABLE account, didn't know about it, and didn't get an ABLE account until they were 60 years old, right? They wouldn't be able, the federal government wouldn't be able to recapture money from their ABLE account until they opened the ABLE account. They wouldn't be able to go back and say, hey, we paid out this money before you had an ABLE account. We want ABLE account to pay that back too. They couldn't do that. It's only from the date that the ABLE account was opened.
Well, that's a great point. I'm glad you brought that up. So if, for instance, I opened Morgan's ABLE account this year, what you're saying is if they were paying for her from the age of 1, the only thing that they would go back and do is look at recapturing the money from the time that she opened the Able account.
Correct. Right.
Wow.
Yes. Yep.
Okay.
Hmm.
So Keisha, I hope that answered your question. I'm not sure if it does. If not, let us know. But what from what Kelly is saying, it's from the time they opened the Able account. That's when the auditing starts.
That's when their auditing would start pertaining to Able.
Yes,
Now, if they
pertaining.
had money in another account, they could say, they could recapture that as well. Hmm.
Mm. So Keisha, let me know if that answered your question. If not, shoot me another question. But this is great information because it's amazing how the Able account kind of intertwines with the Medicaid or Medicare, and you don't know a lot of that to me is overlapping
Hmm.
in a lot of ways, the rules and regulations, because again, when you think about some people put they put the money into the account because when you're thinking about even putting up money for burial and funeral services or what have you, I was told that if you were to get a life insurance policy, that when they're filling out for SSI and different things, they take that into account as income. So I'm like, would the safe place be for you to store up the funeral money into the Able account?
It would be a safe place to store the money for many reasons. Because first of all, if you're planning for the future, whether it's for funeral expenses or for anything, you're never permitted to have it in that person's name beyond 2000. And this was really the main reason that the Able legislation passed in the first place, because what was happening for people with disabilities receiving means tested benefits, it created a cycle of poverty through their whole life. I'm going to give you money, this stipend, to help you with living expenses, and I'm going to give you your health insurance. I'm going to give you these services, but you better never go over that $2,000 or else you're going to lose everything. So people were spending the money down at the end of the month just to avoid losing their benefits. And what kind of sense does that make? They couldn't save it for things like people would needlessly spend it down, only a couple months later need like a root canal, which I don't know when the last time y'all been to any major dental stuff, but it is expensive. I mean, it's nothing for a root canal and a crown to cost $3,000 today. But they would have had the money in their account, but they had to keep spending it down so they wouldn't lose it. So Able accounts are a great way to save for the future. It could be for funeral expenses, but it could also be for if people that are growing and changing and they need to change electric chairs. They're really expensive. You need to make adaptations to your vehicle for a wheelchair ramp, and you can do that as well. So things like that are really expensive, it gives you a way to do that. And I know we haven't really talked about any of the features yet, and I'm just going to beg Paula and Bunny to have me back again sometime so we can talk about some of the really cool features. But one of the things I will mention to you is that every Able account comes with a gifting page, comes with every account, and you can activate it and use it if you want. I highly recommend that people do. I know my daughter started using it a number of years ago, and you send a link to the person's Able account by text, messenger, email, and it's a wonderful tool. Let's go back to, oh my goodness, my child has outgrown their chair again. We need another electric chair, and Medicaid is going to give us this much money for it, but it costs this. So we need like another $2,000. I'm making all these numbers up, right? You can send a link to your family, to your friends, and say, hey guys, we're replacing, Mary Beth's chair. If you'd like to make a contribution, they make a contribution by clicking on that link, putting the amount of money that they want to contribute, wherever it's coming from, hit send. It goes right into the Able account. It is never a countable resource, so they can't lose their benefits because they've got the money in there. And then you turn around and use it and pay the rest of that for that chair. So there's a lot of benefits to having this. Another one is, and I know that people go, this is never going to happen to me, Kelly, just forget about it. I don't want to hear it. But if I had $1 for every phone call I got that said, oh my God, great Uncle Lewis passed away. I didn't even know this, but God help me, he left my son $5,000 of his life insurance policy. I can't let him have this money. I can't have it because it's not for me. It's in his name. But if I put it in the bank account, what's going to happen? He's over resourced and he loses his Medicaid. He loses his waivers, all the stuff. So I always say with an ABLE account, when you get large contributions from, that could happen, you can put that money in there. Uncle Lewis, we could get that money directed into the ABLE account. It's not a countable resource. So
that's amazing. That is just amazing. And I like that feature. Now, if family members were to add money to that account, is it tax deductible for the family members?
That's the other thing that's fantastic. So anybody can contribute to an ABLE account. It could be family, friends, and in the future, it could be employers, Yes, if they live in Maryland, then they too can take that gift contribution and use that as an income subtraction on their Maryland state taxes. I know, I haven't shared a lot about my daughter's personal journey, but she was born at 25 weeks. She was born in a car racing down 95 at 145 miles an hour. And she was born in the car on the way, oxygen deprived for 10 minutes. So she was resuscitated at the hospital, and it was a medical journey that went for years and years and years, very medically involved. Back then, there was no such thing as an ABLE account, but if there was, it would have dramatically changed things for us. Mom and dad both working at the time. My daughter required basically nursing care 24/7. And we didn't have any benefits because mom and dad were working, right? So we didn't qualify for anything. But we had astronomical medical expenses. And if this account existed back then, when people were calling me, hey, I'm just checking in on Lily, how's things going? I could say, hey guys, she's on this special compound that you have to take to an apothecary and they have to mix it up like old school. And she needs this for her seizure disorder that was so expensive. They would be like, I can help. Give me the link, pay, the oxygen and equipment rental that was $400 a month, the specialty formula that was almost $400 a month. I know people would have said, let me help, because I wasn't able to go back to work at that point. I was caring for her 24/7, and they would have been happy to do it. Right. So I wish that existed back in the day. And yes, they could have all had an income subtraction. Let's just say grandma lives in Florida, though, and she could make a contribution to your child's ABLE account. But if she lives in Florida, she's not going to be able to take an income deduction on her Maryland state taxes because she doesn't pay Maryland state taxes.
Wow, that is so amazing. And I can see your passion in this because of your history of having your daughter and experiencing all the everything that you had to experience with raising her. So definitely I can see the passion in that, and how definitely important it is to have this ABLE account and all the benefits of having it. That's really good. Yeah.
Thank you. Yeah. And hopefully one day I'll get to come back and talk about some of those additional features. I'd love to share how it has really helped teach my daughter financial literacy skills about, nobody's born knowing how to save and budget.
Yeah.
I don't even know what a budget is. And plus she has an intellectual disability, so it's very abstract, but having that prepaid card where I'm able to place a certain amount of money on that card every month. And now that she's 21, giving her a chance to practice like what she's spending and what she's saving a month. I mean, none of us were born knowing how to do that, right? We have to practice. So it's been a wonderful tool for that, and just so many other things. But just for now, just know that the main benefit of opening an ABLE account is to be able to have money for their future and protect their benefits. That's the main point. And maybe we'll come back another time and we'll talk about all the other features for the ABLE account that I think are super helpful.
Yeah, because I think when we talked at the conference, there's so many different spinoffs from the Maryland ABLE account, helping our special needs individuals to be financially literate, because that is very important. You can't just underestimate the fact that they can learn how to add, subtract, and understand that it's there or it's not there.
Exactly.
One thing that I definitely wanted to bring out too is when I set up Morgan's account, how you can automatically take a certain amount out of her account each month. And you can, it's almost like doing a direct deposit. Can you tell us a little bit about that, Kelly? Because I will say that I was somewhat confused. But then like just going trial and error, I really figured it out. And I will say it has really worked for Morgan. Now, I haven't made any deductions. I haven't taken any money out. So if you can add, I know we running out of time, but if you can tell us also the various ways that we can deduct money and the ways that we can put money in.
Yes, that's a great idea. So if you're ever interested in opening an Able account, you're going to want to go to the website. If you live in Maryland, we highly recommend that you check out Maryland. Again, we're one of 47 Able programs nationwide. Many of them are open for national enrollment, including Maryland. But if you're interested in a Maryland Able account, go directly to the website, www.maryland, all spelled out, able.org. And you would be able, at the website, there's frequently asked questions you can check out. The program disclosure book is there that gives you all the details. But then when you're ready, you click on an open an account now button. It'll walk you through a series of questions. It's going to take you about 15 minutes. Paula, did you find it took about 15 minutes, or was it longer for you? Okay. So once you are finished setting, opening the account, it's going to ask you to link your child's Able account with an existing bank account of your choice. So when I opened mine, when I opened my daughter's, she was 14. She didn't have a checking account. She didn't have any of that kind of stuff. So it made sense to link it to mom and dad's checking account because I'm her ALR. I could do that. And when I did that, I was able to make transfers from my own checking account into her Able account electronically. It's all online management. And what was great is when Lily, fast forward, many, many years later, she didn't start receiving SSI benefits until she was 20. It took 2 years to get that straightened out. Torturous 2 years. But anyway, when that happened, I was able to link Lily's SSI Rep Payee account to her Able account. So then what I'm able to do is whatever money Lily doesn't spend out of her SSI money, I move it electronically over to Able. And I can set it up to do, if I know approximately how much that's going to be, I could set up an electronic transfer from that account to her Able every month. If I know it's $200 a month, then I would do that. But what's cool about it is, I never have to worry about her SSI Rep Payee account getting over $2,000. That's not happening. After what I went through to get it, we're not losing SSI and we're not losing Medicaid and any of those waivers, right? So I just electronically transfer that money over there by linking it to a linked bank account. And you can link multiple bank accounts to the Able account as long as that account is in the name of either the account owner, the person with a disability, or who's ever managing the account. So it makes it really easy. Same way when we want to start taking withdrawals, Paula. So when you're ready to, or when you need to use money for your daughter, you would just, let's just say you sent her to a special needs summer camp or something like that, and it was $500. You would go log into your Able account and you could electronically transfer that $500 back to your link bank account and pay by check or pay the credit card that you charged it on. That would be one way. Or you could get the prepaid card, which is something I wound up eventually getting as my daughter got older and we started, using more, letting her use her own card and her money to pay for things. And then what I do is I load the prepaid card every month with a certain amount of money, and that's her budget that she gets to spend. And I can also use that prepaid card when I register her for summer camp. Instead of putting my credit card number in to pay the fee, I put her Able prepaid card number in there. So again, that's a really direct and easy, convenient way to withdraw those funds without having to do the electronic transfer. But either way works.
Kelly, what was the maximum amount that you can have in an Able account?
If someone's receiving SSI cash benefits, it's $100,000. At $100,000 Social Security, if you go beyond that, they're going to push a pause button. Medicaid remains in place. Any waivers remain in place, but Social Security would stop the monthly cash benefit. And at any point you were to spend some of the money in the Able account and spend it below, it would fall below $100,000. Social Security can automatically reactivate that benefit because she was never disenrolled.
Okay.
Or your grandson was never disenrolled, which is what would happen if you have money outside of an ABLE account or a special needs trust.
Yeah. So if someone is opening up an ABLE account, like my grandson is 8, he's not getting any type of funds, no resources or funds. So if I was to open up that account and start adding money into that account on a monthly basis, is there a cap that they would apply to that account as I'm adding money to the account every month?
Well, Social Security wouldn't be allowed to look at that when he's eligible to apply, like at say age 18. If young ones apply when they're not 18 yet, they're going to count the whole family's income. And that's where we
Right.
usually see
Yeah.
people being disqualified, right?
Mhm.
That's what happened in my case with my husband was still working, and everything. And we didn't qualify. But
Mhm.
when Lily turned 18, they're only looking at her income. Well, at that time it was nothing 'cause she was still in school, right?
Mhm.
So she didn't have to worry about that income threshold. But if she were to have money in an outside bank account, that maybe people had given her over the years, if it exceeded 2,000, they would have rejected her from Social Security benefits because she has too much money.
Got it.
She's
Got it.
over
Got it.
$2,000.
Got it. Okay. Okay.
Yeah. So yeah, the money in your grandson's account, it wouldn't matter how, if it was in there, as long as it didn't exceed 100,000. Now, the reason I say SSI benefits is
Mhm.
because some people receive SSDI. SSDI, there is no asset limit on there. So a person, the different, I don't know if you all are familiar with the difference between SSI and SSDI, and I don't work for Social Security, but I, have been around long enough to understand the difference. With SSI, this is something that a person would receive if they have a qualifying disability that doesn't have their own work history. So a lot of times our kids, for example, my daughter, she's never worked, she's never paid those, FICA taxes or whatever. She qualifies for SSI. Now, when dad is going to retire, one day, he's 69 years old, maybe a couple years from now, he's going to retire. She would be eligible at that point to receive SSDI because she's going to access his work history. And then she no longer has that asset limit. So it gets a little complex. SSI does have the $100,000 limit. SSDI does not. But Medicaid waivers still do. So people say, well, I don't need it because I have SSDI, so I don't have to worry about that. Unless you're receiving any kind of Medicaid waivers, you still need to be aware that there's asset limits for those things.
Okay.
Kelly, you are a walking ABLE encyclopedia. I'm not kidding, and you are really good at this. I mean, and I will say at the conference, you convinced me. And I went home. I said, you know what? I'm gonna open Morgan an ABLE account. And I've opened her an ABLE account, and I do have it set up for it to come out like a certain amount to go into her account every month. So I am sold on ABLE, and like you say, it's a way for her to be able to put up money because she should have that option just as well as anybody else. Because if you have to spend down every dime when that need comes up, then it's the family that has to pay for it. But I like it too because I didn't even think about this, but Morgan just had a birthday and everybody's been asking me what to get her. And I was like, she doesn't need anything. But now moving forward, what I'm gonna do
Send that
is
link.
let them contribute to her ABLE account. Yeah.
Yes, it's so easy. And if you need help setting, figuring out how to do it, you can do it right from your dashboard. But you have my email and I'll help you. I know we're running out of time, but one quick thing. We have a little over 8,000 Maryland ABLE account holders here in Maryland.
Wow.
And they are together over the last 7 years of us being open as a program, have saved over $131 million in assets. These are people that could never have had more than 2,000. Okay. So all those over 8,000 people together have put that amount of money in. But check this out. We have about 766 of those account holders out of 8,000 use their gifting page. Okay. And over the last 7 years, you're not going to believe this, but they have received over $7.2 million in gifts.
Oh my goodness.
When I
Oh
tell
my
you,
goodness.
people like that option, trust and believe.
And it's tax deductible? Yes, that's a
If
very
you
good
live
option.
in Maryland, if you live in
If you live in
Maryland,
Maryland, yes. If you live in Maryland, that is
I like
really
this.
good.
Oh
And
my
can you
goodness.
pay mortgage's rent out of her Able account?
Can I, Kelly?
She could, yeah. So, yeah, a lot of times people that have a special needs trust will fund their ABLE account every year just to be able to pay money in rent to wherever the rent is going to. Yeah, you could do that.
Okay, this is good
Yes.
information.
Yeah.
Well, for those that, I mean, and we're definitely going to have you back, Kelly. And we had already talked about that because we have so many different subjects that
Yeah.
stem from the Maryland Able account. But as you can see on the bottom of the screen is the website to the Maryland Able account. So if you have not explored the option of a Maryland Able account for your special needs individuals, please try. And like Kelly said, it's now extended where the age is they have increased the age limit. So for those that it wasn't, you weren't able to do it, now you may be able to do it. So go and explore those ideas. Also, Kelly, your the Maryland Able has a Facebook page, and they have, if people have questions, how do they get it to you?
You could always go to the Maryland Able Facebook page and put a message there in Messenger. But we also have a customer support team that's open Monday through Friday from 9 a.m. until 8 p.m. And you can always reach out to them with questions. And if you ever want to get in touch with me, if you want to check with Paula, she has my contact information. If you need, an additional consultation or something like that, I'm always happy to help because remember, I'm also a parent who sometimes needs help trying to figure stuff out for my daughter. So I know how valuable that resource is.
Well, I love it, Kelly. Thank you so much for coming.
Yeah.
And again, you're going to be our subject matter expert on Able accounts.
Able accounts, absolutely.
Yes, and finances, period. So I really appreciate you coming on. I also want to just thank Bunny for joining me. I also want to tell everybody about our walk that's coming up. For those that don't know, we have a walk coming up on November the 8th, and it's in Oxon Hill. So we're asking for everybody to come. Here is the flyer that we're putting on our page. You can go on, you can register, you can use the QR code to register, or you can go to the website. We have it on all of our Facebook pages, our Instagram pages. Please come out and join us on November the 8th. This is our first annual walk. So we're just going to start off a little light. We're going to do 3K. But we're really excited. We have a lot going on behind the scene. The team is excited, and we are just so excited about where this is going. So please, 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 if you haven't registered today, you have until, I believe, October the 28th. But what we're trying to do is get as many people to register as early as possible so that we can be prepared to have your shirts, your medals, and everything. So again, join us on November the 8th for our first annual advocacy walk. Yay! So
Yes.
with that being said, we will join. We ask that you join us again for another show next Thursday. We appreciate you joining us tonight. And again, Kelly, thank you so much. But
Yes.
again, we're gonna have you back on here because we want to talk about other subjects.
Awesome.
Thank
It's been
you,
such a
Kelly.
pleasure, ladies. Thank you so much.
Yes, and thank everybody for joining us. And again, we say everybody have a great weekend and come back and join us next Thursday. Okay, everybody have a great weekend.
Okay.